Hi, this is Walter Montero, and you're listening to this week's edition of the Real Estate and Mortgage Show.
Hey guys, welcome to another edition of the Real Estate and Mortgage Show. This episode is about a question that I see quite a bit on the internet actually, and that's with regards to whether mortgages are tax deductible. And unlike our American counterparts who are, able to deduct their mortgages on their taxes, Canadians unfortunately don't have that benefit. However, sort of the payoff to us is that we can sell our principal residence without any tax implications. So if you make a profit on your personal residence, it's money that's deemed to be tax-free, and you don't have to pay CRA any money on that. Now, having said that, I just want to remind you that CRA did implement a new rule that regardless of your property being tax-free, if you sell it in any given year, you are obligated to report it on your tax return the following year. You are not subject to any tax, but Revenue Canada wants to know that you have in fact sold the property, and they want to know the details of the transaction. Don't know if that is any kind of indication of something that might come down the pipe in the future, but nonetheless, right now, if we sell our principal residence, we don't pay any taxes. So, in terms of whether a mortgage is tax-free or not, first of all, if it's a principal residence, the answer is not hard and fast. The simple answer is, of course, they're not tax-deductible in any way because of principal residence. So you do, obviously have to pay that with after-tax dollars. But having said that, as I had mentioned, any gain that you make on the property is also tax-free. Now, if you borrow money against your home for the purpose of making another investment, for example, buying another piece of real estate or investing in the stock market or investing in something that generates an income of some sort, then obviously it becomes tax deductible. That portion that you borrowed, of course. Now, I want you to be clear that if you're borrowing against your house to buy an RSP, for example, then that kind of changes things, because even though you cannot deduct that interest, you can obviously defer the contribution that you made to your RSP against your taxes for that given year. So you don't get the interest benefit on your taxes, but you do get to defer the amount that you made into your RSP. Okay, so if you're borrowing money to make an investment against your personal residence, then yes, it does become tax deductible. But if you're borrowing it just to, do a renovation or buy a boat or, do something like that, then of course it's not. Now, if you have an investment property and you have a mortgage on it, then of course the interest is tax deductible. Anything that you incur in terms of costs, it is tax deductible. And then, of course, the other benefit of owning an income property is being able to depreciate your property, which is using your capital depreciations. And that is also another tax benefit that you have as a result of owning an investment property. Now, the only thing you have to be careful about in terms of capital depreciation is when you do go ahead and sell the property at the end, when you end up disposing of the property somewhere along the line, somewhere in the future, then you have what's called recapture taxes. And you have to, obviously pay back that money that you have depreciated over these years, because typically, properties don't go down in value. They typically go up. Okay. So that's basically the long and the short of it in terms of whether mortgages are tax deductible or not. Now, some things that I want you to be careful about, especially with you for the owners that have income property. If you happen to refinance that property, your income property, to buy another investment, then that new mortgage or that refinance is still tax deductible. Okay. Now, if you are borrowing that money against your investment property to buy, say, a boat or a brand new car or, something along those lines, then it's not tax deductible. So you have to be very careful about that. I've seen many people do it where they'll go out and refinance an income property thinking that, hey, it's an income property and, this is tax deductible. It depends on the nature of what you're using the money for when you borrowed the money. Okay, so if you're borrowing the money to buy another income property, by all means, it's tax deductible. But if you're buying toys, then it's not. Now, I want to sort of finish off with a disclaimer more than anything else. I'm a real estate agent. I am not a tax expert. by any means. So if you have any questions to what I have said here, please don't accept my information that I'm sharing with you as gospel. You need to go to a tax expert, go over your situation with them, and then I'm sure that these experts will guide you in the way that you should be advised, and you'll be in a lot better hands than taking tax advice from me. This is just my experience, and I just thought I'd share that with you because, as I said, it's a question that comes up quite a bit, and just wanted to share it with you. All right. Hope you're having a good week. We're closing in on the end of the month, and the market's still pretty hot. So if you're still looking to do something in terms of buying or selling, by all means, do that. If you're looking to refinance, remember the rules change January 1st. So if you're looking to do anything and not wanting to worry about that stress test that's coming into effect on January the 1st, then please do so now, okay? You can go to our website, which is www.homepreapproval.com, and that will land you onto our short video page, just kind of giving you an introduction of what we do. Just click on the apply online, and it will take you straight to an application, and you will be taken care of in terms of one of our mortgage experts taking care of you. Okay? Thanks very much, and we'll talk to you guys later.
Thanks again for listening to this week's episode of the Real Estate Mortgage Show. If you have any real estate questions, please direct them to me at 519-624-9222 or walter@maximumresults.ca, or you can find me online at www.cambridgehouses.com. If your interests are in mortgages, please feel free to call 519-624-9222 or email Karen at maximumresults.ca, or you can find her online at www.m as in Mary, R as in Roger, financial.ca. Thanks again for listening, and I hope you have a great week.